This week's main event was Friday's employment situation report, the biggest piece of employment and wage-related data released each month. And thankfully, payroll growth came in lower than forecast, exactly what the markets wanted to see, allowing the bond market and mortgage rates to have a healthy rebound and rally to close out the week. We basically regained a lot of the ground we lost this week because unfortunately rates got crushed. Incoming economic data, news out of the U.S. Treasury of increased borrowing costs helped tackle this absurd deficit that our government has found itself into. I mean, we got hurt. And really, over the last couple of weeks, we've seen is this level of uncertainty, of concern that the Fed may decide to take the short-term benchmark rate higher and hold it at that level for much longer than what the markets have been forecasting. So remember, rates are not based on current economic conditions. They are based on projections, of forecasts for economic conditions months and years down the road. So when the Fed talks about needing to take their short-term benchmark rate, the federal funds rate higher, when they talk about further monetary tightening, these impact the economy and those projections for the economy down the road, which directly impact mortgage rates. So the last CPI that came out much lower than forecasted, allowing us to have a healthy rebound. We had Friday's jobs report that came in lower, along with a downward revision to the previous month. And then we have this week's next CPI coming on Thursday the 10th. If inflation comes in lower, that is going to be huge. It's going to be consistent month-over-month reduction, showing a stable trend, and then inflation is moving closer to the Fed's 2% target, exactly what we want to see, and will be justification for a more meaningful shift in rates. This is what we're talking about right now being such an opportune time for our buyers. Home prices still aggressive, home appreciation still strong, and mortgage rates trending lower. It's not going to be immediate. It's going to be a long trend, but it's why you want to get that property now. Enjoy all those benefits of home ownership, and then refi later once you're able. Paying more for an asset, even with a lower interest rate, does not translate to a lower monthly payment. You have any questions about these housing trends, about these headlines, or if you want to talk about how they impact you and your purchase power, give me a call. Love to talk to you. This is Billy.Saylor, your mortgage professor, 571-330-5884. Have a great week.